Hello there and welcome to the weekly outlook. First of all, we're just going to go over and just have a look at the US dollar as a whole. Now we had the non-farm payrolls out on Friday, which really has solidified the fact that the Federal Reserve will be raising the interest rate on the 16th of December. So bearing that in mind, obviously we had quite a big rally on the euro due to the ECB not adding any further stimulus to their QE package, which is currently running at the moment, which was heavily expected by the market. So we did in fact have quite a big pullback on a correction on the current price. Now that doesn't necessarily mean that the euro won't rally again next week, but I do expect this rally to be fairly limited now, and looking for sort of areas where we can resell the euro. Now, what I've come up with so far is we've got a sell zone really, which is this area of confluence around in this space that I've marked out here with this rectangle. However, we've seen, already towards the end of Friday, we're starting to dip back down. 01850 was also a support and resistance level going back a few months. So, we could see that this price either becomes support here, and we get a further move up to the sell zone, or we continue through that, and that could be a point to resell. However, though, no matter what happens, I am looking to resell the euro, and I'm still expecting the euro to drop down to parity and possibly below parity by the year 2016. So no matter what happens, that's what we're looking for. There's not a great deal out on the calendar with regards to the euro next week, so we will just be monitoring the price and seeing where it goes. We have got on Thursday the SNB monetary policy assessment and the SNB press conference for the Swiss franc, which could affect the Aussie. Could affect the euro. So we'll be keeping an eye on that. So going over to the calendar, and bearing in mind that we are likely to see some US dollar strength coming up to the 16th of December. The key events that we're going to be looking to trade are the RBNZ rate statement and the monetary policy statement on Wednesday for the New Zealand dollar. Now, the New Zealand has seen a bit of an improvement in data. The dairy index has increased. The dairy sector making up 7% of the GDP for New Zealand, so it does have an effect on the currency. One thing that does stick in my mind is the previous press conference, where Graham Wheeler, the governor of the RBNZ, stated that if the New Zealand dollar continues to rally, then they will intervene by weakening their currency. Now, one of the ways that they can do that is by cutting interest rates. Now, the Roman interest rates are still at 2.75%, which is the highest yielding currency certainly out of the majors, and it's still very attractive for investors to buy New Zealand against any other currency. Now, one of the things that the RBNZ do want is they want to keep their currency weak to enable competition with exports, which will help bolster their GDP in the future. But obviously, we've had a big fall in the New Zealand dollar already. If we have a look at the weekly chart, you can see obviously we've had a huge fall from the 8-8 section back in mid 2014. So over the last 18 months, we've had a huge fall, which was initially instigated by the RBNZ talking the currency down. Now we have been making slightly higher lows. We've made a higher high there in this sort of pattern here, which is starting to develop and indicate a turnaround in the trend. We've actually got a bit of a head and shoulders pattern there as well on the weekly chart. If we enlarge that, there you can see we've got this first shoulder here, then this head, and then this second shoulder. So we're kind of at a point of turning around. Now, like I said, what does stick in my head at the moment is that comment from Governor Wheeler. Now, we are coming up to the RBNZ rate decision, where they could, in fact, make that rate cut in order to try and keep their currency down. Now, investors and speculators will obviously see that is the reason why they're cutting interest rates, and not because of economic outcomes or reasons, which could cause initial weakness in the New Zealand dollar, but then it could start to buy back again. Now, going into the US dollar, I'm going to be writing an extensive report towards the end of the year for the outcome of 2016, which will describe a little bit more about the US dollar and the rate hike. But what I will say is that the US dollar has been there's been longs. People long on the US dollar for a very, very long time now. All on anticipation of this rate hike. Once that rate hike has materialized, we're probably going to see these US dollar long trades start to be tapered, and these emerging currencies, which are starting to show strength, things like the New Zealand dollar and the Aussie dollar, starting to rally. Okay, so the rate cut on New Zealand dollar on Wednesday, which is likely, is probably going to see some downside, but I would suggest that it's probably going to be slightly limited. Now, the RBNZ did have a fair price of 65 cents to the dollar. We are above that at the moment, so it is likely that they will make that rate cut to try and keep the price down. But the downside, I think, is certainly going to be limited to 6,000 on the New Zealand dollar, which was our previous prediction some time ago. From there, in the long term, I'm going to be looking to rebuy the New Zealand dollar from 6,000. At the moment, I'm still looking to sell. It's still a weak currency compared to the US dollar at the moment, and this going into this rate cut on Wednesday could give us that push back down to the 6,000 level, where I think we're probably going to find the bottom price here for the New Zealand dollar, and we can start to look to rebuy. Okay, so that could very well happen over the next week. Okay, so obviously we've also got some data coming out on the US dollar. We've got retail sales, which is expected to be better. Still looking for strength in US dollar at the moment. We've also got the retail sales figure coming out on the sorry, not the retail sales figure. We've also got the employment rate coming out on the Aussie dollar. Now, employment rate is actually expected to get a little bit worse this time. Now, we did have some good data come out from the Aussie on the employment recently, which did cause a rally. But again, if this employment figure does start to lose some of its gains that it's had recently, then we could see that Aussie just pare some of its gains at the moment, but then probably start to rebuy them up once we get down to lower levels. Again, this is another one where I'm looking for the turnaround to start to happen. Aussie dollar, if we look at the weekly, again, you'll see that we've also had a huge fall on the Aussie from when the RBA started to talk it down, and then obviously once the US dollar got stronger, we saw a significant drop. It has reached its fair price. It's gone through its fair price, which was initially 75 cents to the dollar, then 7,000 or 70 cents to the dollar, and it's now started to come back up. It's just breaking new highs here and making a new high with these lower highs here as well. It does have potential to rally back up to 7.6 initially, possibly further. Okay, so we'll be keeping an eye on that. That employment report will have a significant impact on the Aussie dollar. So if it does come in weaker, we will certainly see the Aussie dollar sell off. If it does come in stronger, however, it's going to put strength into buyers that are coming into the Aussie at the moment, and we shall see it rally further. Okay, so we're going to be trading out of that one at the moment. The other one that we've got some important data out is the pound. We've got the MPC official bank rate votes, which isn't expected to change and remain at 108, with McCafferty being the dissenter there and voting for a rate hike. Official bank rate isn't expected to change, but monetary policy summary is what we need to listen to and see if there's been any sort of change in monetary policy or the views from the MPC members. Now, Mark Carney did say the other day that rate hikes would be slow, would be gradual and small and gradual. At the moment, I still believe we've got some weakness in the pound, and we should see the pound sell off against some of these major currencies. Certainly things like the Aussie dollar, the New Zealand dollar, and even the Japanese yen. The US dollar, I think we probably will see some sells back down to 5,000, and I would expect it to make a new low over the coming weeks of 148. Again, I think the bottom price on this will be around about 144, where we can start to look to rebuy the pound against the US dollar after that rate hike from the US. So I'd expect to see that downside there to the 144 level, and then looking for a sell-off, a rebuy, or to rebuy it on the long term. Okay, so there's quite a bit of data out this month. The markets are going to be fairly volatile, but it's really going to set us up for 2016, and we're going to see where we are in terms of divergence between the central banks and monetary policy of central banks. That's what's really driving the market at the moment. And once we have all that information, then going into 2016 is going to make it a very, very profitable year. So stay tuned, and I hope you can make some pips next week. And I look forward to speaking to you next week. Cheers for now.